How does a company that lost money for a decade straight suddenly become worth half of Micron in a single afternoon? Not next year. Not after some slow climb. In one trading session. One IPO. One number that made investors on 3 continents stop what they were doing and recalculate everything they thought they knew about who actually controls the world's memory chip supply. On July 27, 2026, a Chinese company most people outside the chip industry had never heard of went public in Shanghai. By the time trading closed on day 1, its stock had surged 466%. Not risen. Surged 466% in a matter of hours. That single day turned it into the most valuable company listed on any mainland Chinese exchange. Bigger than the Industrial and Commercial Bank of China, one of the largest banks on the planet. And roughly half the size of Micron, an American memory chip giant that's been building its reputation for almost 50 years. Here's the headline version. The company is ChangXin Memory Technologies, CXMT for short. China's largest domestic producer of DRAM, the type of memory chip that sits inside nearly every phone, laptop, and AI server on Earth. CXMT priced its IPO shares at roughly $1.28. By the close of its very first day of trading on Shanghai's star market, shares closed near $7.24. That gave the company a market capitalization of approximately $487 billion. Micron, for comparison, sits at roughly $900 to $960 billion, depending on the day you check. Do the math, and CXMT landed on day 1 at almost exactly half of Micron's size. A company that raised $8.6 billion in this IPO just became, on paper, one of the most valuable memory chip makers in the world, before most people had even finished reading the news alert. To understand why that number is so shocking, you need to understand where CXMT actually came from. This wasn't a company riding a decade of steady, obvious success into a triumphant public debut. For most of the last 10 years, CXMT bled money. Reports put its cumulative losses somewhere around $5.4 billion. That's not a rounding error. That's a company that spent a decade sinking enormous amounts of capital into building manufacturing capacity, refining its process technology, and trying to catch up to memory chip giants that had a multi-decade head start, all while barely making a profitable chip. Founded in Hefei in 2016, CXMT spent its early years fighting a technology gap so wide that most Western analysts didn't consider it a serious competitor at all. Just another state-backed project burning cash with no clear path to actually matching the manufacturing precision that Samsung, SK Hynix, and Micron had spent decades refining. Then 2026 happened, and everything about that story flipped fast. The global memory chip market has been caught in an unprecedented supply crunch this year. AI infrastructure spending exploded, and every major tech company on Earth started fighting over the same limited pool of memory chips to power their data centers. Standard DRAM contract prices surged somewhere between 55% and 60% in early 2026 alone. Suddenly, a company that had spent a decade building out DRAM manufacturing capacity, at a loss, in relative obscurity, found itself sitting on exactly the kind of production capacity the entire world was suddenly desperate for. CXMT posted $4.8 billion in revenue in just the first quarter of 2026 alone. One quarter. Almost matching what it used to lose across entire years. Picture that shift for a second. A company that spent a decade being written off as a cash-burning also-ran suddenly found every unit of capacity it had built during the lean years, turning into pure, urgently needed revenue. Almost overnight, simply because the rest of the world ran out of memory chips at the exact moment CXMT had capacity sitting ready to sell. That's the setup. But the actual detonator behind the 466% surge is a little more specific, and it involves a name you already know. Just weeks before CXMT's stock debut, the Financial Times reported that Apple had quietly begun testing CXMT's memory chips, specifically for devices sold in the Chinese market. Apple, a company famous for having some of the most rigorous, most demanding supplier qualification standards in the entire electronics industry. When Apple even starts testing a chipmaker's products, that alone functions as an extraordinary credibility signal to the rest of the market, regardless of whether a final deal ever gets signed. Layer that on top of CXMT's sudden swing into massive profitability, its position as China's largest domestic DRAM producer, and heavy backing from state-owned shareholders, and you get exactly the kind of story that turns a routine Shanghai IPO into a 466% single-day explosion. Investors weren't just pricing in CXMT's current DRAM sales that day. They were pricing in the possibility that the most valuable company on Earth might soon be buying from them too. But here's the question that actually matters, and it's the one most headlines about this surge conveniently skip past. Does a 466% stock pop and a valuation of roughly half of Micron mean CXMT has actually become half as good a memory chip company as Micron? Or is there a much bigger gap between what the stock market priced in during one euphoric afternoon and what CXMT can actually deliver at scale, reliably, for years? Let's be precise about what's real here and what's still an open question. Here's what's genuinely true. CXMT is not a small player anymore. It's already the fourth largest DRAM producer in the world, sitting behind only Samsung, SK Hynix, and Micron, the exact three companies that have dominated this industry for decades. CXMT currently controls roughly 11% of global DRAM wafer capacity, and that share is projected to climb toward 15% by 2028, as new production lines come online across multiple facilities in China. Its swing into profitability in early 2026 is real, driven by a real, well-documented global memory shortage, not accounting tricks or one-time gains. And Apple's interest, however preliminary, is a real, confirmed on-the-record development, not a rumor someone invented to pump the stock. Here's what's still genuinely uncertain. A stock market valuation, especially one built on a single euphoric trading day, is not the same thing as demonstrated manufacturing reliability at scale over years. Micron's roughly $900 to $960 billion valuation reflects decades of proven, consistent execution, deep relationships with virtually every major electronics manufacturer on Earth, and a track record of surviving multiple brutal industry downturns without losing its technological edge. CXMT's $487 billion valuation reflects one extraordinary day of trading, built substantially on excitement and expectation, rather than years of proven delivery at that scale. At least 15 state-owned shareholders hold roughly 36% of CXMT, meaning a significant chunk of that valuation is also tied to confidence in continued state backing, not purely commercial fundamentals the way Micron's stock price is. There's another wrinkle worth understanding here too. Memory chip manufacturing isn't a business where you can simply announce more capacity and expect the market to trust it instantly. Yield rates, the percentage of chips that actually come off a production line working correctly, take years to mature. Samsung, SK Hynix, and Micron didn't just build factories. They spent decades refining the exact chemistry, timing, and precision needed to consistently hit yield rates above 90% at massive scale. CXMT's rapid capacity growth is real, But whether that capacity can consistently deliver the same reliability at the volumes Apple and other major customers actually demand is a question that 1/4 of strong revenue doesn't fully answer. So here's the honest scoreboard. On paper, on July 27, 2026, the market said CXMT is worth half of Micron. In terms of decades of proven manufacturing reliability, established customer relationships, and consistent execution through multiple industry cycles, CXMT is nowhere close to Micron yet. Both of those statements are true at the same time. The stock price captured genuine excitement about where CXMT might be heading. It didn't capture where CXMT currently stands next to a company that's been doing this since 1978. But here's why memory chip executives at Micron, Samsung, and SK Hynix aren't dismissing this as just another overheated stock story. Because underneath the exciting valuation number sits a genuinely serious shift in who controls the world's memory supply. This isn't happening in isolation. It's landing directly on top of an already tense year for the global memory industry. SK Hynix had just completed a $26.5 billion NASDAQ debut of its own, the second-largest stock market listing in American history, behind only SpaceX. Samsung had just posted a staggering 1,814% surge in operating profit, with company leadership warning that the current memory shortage could stretch all the way through 2028. Apple's own CEO had publicly acknowledged that memory price increases had become difficult to avoid, and that the U.S. should review all possible supply options, including companies facing restrictions under national security rules. Every single piece of that context was already pushing memory chip stocks into extraordinary territory before CXMT even opened for trading. Then CXMT's debut landed directly on top of all of it and gave investors a very specific, very concrete new fear to price in. If Apple is genuinely testing CXMT's chips, and if CXMT's production capacity keeps expanding the way it's projected to through 2028, that's not just one company's stock story anymore. That's a signal that the world's tightest, most valuable memory supply chain now has a serious, rapidly scaling Chinese alternative sitting inside it, with actual growing capacity, not just ambition on a slide deck. And there's a bigger pattern worth naming here, because this isn't the first time we've watched this exact sequence play out. Identify an industry where Western companies have held a decades-long advantage. Watch a Chinese competitor absorb years of losses building out capacity nobody was paying attention to. Then watch a sudden shift in market conditions turn that quiet, loss-making capacity into an overnight asset the entire world suddenly needs. We've seen this in solar panels. We've seen it in EV batteries. Memory chips, arguably one of the most capital-intensive, most technically demanding industries on Earth, just became the newest chapter in that same story. So where does this actually go from here? The first thing worth watching is whether Apple's testing relationship with CXMT actually turns into a real, confirmed supply deal, or whether it quietly fades the way Apple's earlier 2022 talks with a different Chinese chipmaker did, after facing serious political pushback in Washington. That decision alone could either validate or completely deflate a meaningful chunk of the excitement currently baked into CXMT's stock price. Second, watch CXMT's actual production numbers over the next several quarters, not just this one blockbuster IPO day. Going from 11% to a projected 15% of global DRAM wafer capacity by 2028 sounds impressive on a roadmap slide. Whether CXMT can actually execute that expansion reliably, at the yield rates and quality standards that Apple and every other major electronics customer actually demands, is the real test that separates a hyped stock debut from a company that genuinely earns a spot next to Samsung, SK Hynix, and Micron. Third, watch how Micron, Samsung, and SK Hynix respond competitively. None of these three companies got to where they are by standing still when a new competitor shows up with real capacity and real momentum. Expect continued heavy investment in next-generation memory technology, particularly the high-bandwidth memory chips powering the AI boom, as the established players work to make sure their competitive edge stays anchored in cutting-edge performance rather than just raw manufacturing volume, which is exactly the terrain where a fast-scaling competitor like CXMT could eventually catch up fastest. Fourth, and this one matters just as much as anything already discussed, watch what happens in Washington. CXMT's ties to state-owned shareholders, combined with growing Chinese dominance in a critical technology category, are exactly the kind of combination that has historically triggered scrutiny from U.S. policymakers. If Apple's relationship with CXMT deepens, expect renewed political debate over whether a company this closely tied to Chinese state backing should be allowed to become a core supplier for products sold to American consumers, even if the current testing is limited specifically to devices sold in China. So let's put this all together, because both the CXMT just became a Micron-level giant overnight excitement and the "it's just a hyped IPO, pop, ignore it" dismissal are missing real pieces of what actually happened here. The excited version of this story overstates things. A single day of trading euphoria is not the same as a decade of proven manufacturing reliability. Micron's valuation reflects 50 years of consistent execution. CXMT's reflects one extraordinary day built heavily on expectation, state backing, and a specific, still unconfirmed relationship with Apple. But the dismissive version misses something just as real. A company that was bleeding billions of dollars just a few years ago is now the fourth largest DRAM producer on Earth, genuinely profitable, genuinely expanding its global capacity share, and genuinely credible enough that Apple itself is testing its chips. That's not hype manufactured out of nothing. That's a real, well-documented shift in industry fundamentals that happened to collide with an extraordinary stock market debut on exactly the right day. That's the real story underneath the eye-catching percentage in the headline. CXMT didn't actually become half as capable as Micron on July 27th. What happened is that global investors, watching a genuine memory shortage, a genuine Apple connection, and a genuine multi-year capacity expansion all converge at once, decided the gap between promising Chinese challenger and serious global memory player had gotten a lot smaller than anyone had priced in just 1 week earlier. Let's run through the numbers one more time. $1.28, CXMT's IPO price. $7.24, where it closed on day one. 466%, the single-day surge. $487 billion, CXMT's opening day valuation. Roughly half of Micron's roughly $900 to $960 billion. Fourth largest DRAM producer in the world, up from a decade of billions in cumulative losses. $4.8 billion in revenue in a single quarter of 2026 alone. 11% of global DRAM wafer capacity today, projected to climb toward 15% by 2028. Individually, these are just numbers about one stock's opening day. Together, they describe the exact moment global markets stopped treating China's memory chip industry as a distant someday competitor and started pricing it as a present-day rival sitting directly across the table from Micron. If this video helped you understand what actually happened here, not the exaggerated version, not the dismissive version, but the real numbers and the real stakes, hit subscribe, because we're going to keep tracking exactly what happens next with CXMT, with Apple's testing relationship, and with how Micron, Samsung, and SK Hynix respond to a competitor that just got a lot harder to ignore. Thanks for watching. We'll see you in the next one.